Have you noticed a sudden increase in for sale signs in your neighborhood? The reasons behind this trend may surprise you. As we dive into today's breaking news, we'll explore how landlords across the country are scrambling to offload properties like never before. With economic pressures mounting, many are left wondering what's driving this urgent sell-off and what it means for the housing market. Are these warning signs just a temporary blip, or are they indicative of a more significant shift in the real estate landscape? Stay tuned as we uncover the truth behind the 8 types of properties landlords are desperately trying to sell ASAP. The real estate market is experiencing unprecedented changes, creating a whirlwind of activity that has many landlords on edge. Recent trends show a noticeable increase in property listings as landlords respond to economic pressures. One significant factor driving this surge is the rise in interest rates. As mortgage rates climb, potential homebuyers are finding it more challenging to secure financing, resulting in longer selling times and an increase in available properties. Inflation is another critical element impacting the decisions of landlords. With rising costs for maintenance, utilities, and property taxes, many landlords are feeling the pinch. This financial strain compels them to sell properties that may have once been considered investments, leading to a higher inventory of homes on the market. Additionally, the rental market's dynamics are shifting. Many renters are opting to buy homes rather than continue renting, which directly affects the demand for rental properties. As a result, landlords are increasingly motivated to sell their investments while they still can, fearing that the market may become even less favorable. These changes signal a significant moment in the real estate landscape, and understanding them is crucial for anyone interested in property investments. In the next section, we'll break down the 8 types of properties that are being sold rapidly by landlords and what that means for the overall market. 1. Single-family homes. Single-family homes have been a staple of American neighborhoods, but many landlords are now seeing increased inventory. Many owners are deciding to sell due to rising maintenance costs and the difficulty of finding reliable tenants. In suburban areas, the influx of for sale signs is evident, impacting property values and making it essential for buyers to act quickly if they find a good deal. 2. Multifamily units. Multifamily units are also facing significant challenges. With the rental market shifting, landlords are struggling with vacancies as tenants seek out better living situations or move to more affordable locations. This has led to many owners hastily listing their multifamily properties on the market, often at reduced prices, creating opportunities for investors looking to acquire rental units. 3. Commercial properties. The landscape for commercial properties has dramatically changed, particularly with businesses reassessing their space requirements post-pandemic. Many landlords are forced to sell their commercial assets due to rising vacancy rates and the struggle to secure long-term tenants. This situation opens up opportunities for buyers willing to take on the risks associated with investing in commercial real estate. 4. Vacation rentals. With travel patterns shifting and demand for vacation rentals fluctuating, many landlords are finding themselves in a tough spot. Increased competition from other rental platforms and changing regulations are driving some owners to sell their vacation properties. This trend is particularly noticeable in popular tourist areas where the market is saturated. 5. Fixer-uppers. Properties in need of significant repairs, commonly referred to as fixer-uppers, are being offloaded in greater numbers. Owners are often overwhelmed by renovation costs and timelines, leading them to list these properties quickly. For savvy buyers, this can present a unique opportunity to invest in properties that, with some work, can yield substantial returns. 6. Luxury properties. The luxury real estate market is also feeling the effects of shifting consumer demand. Many high-end properties are facing longer selling times and decreasing prices as buyers become more discerning. Landlords are increasingly motivated to sell these properties, often at a discount, which could provide an excellent opportunity for discerning buyers. 7. Land or unimproved lots. Many landlords are looking to offload raw land or unimproved lots due to rising development costs and delays. Investors are reassessing their long-term visions, leading to a surge in listings for these types of properties. Buyers interested in developing land may find favorable deals as owners seek to cut their losses. 8. Outlying/suburban properties. As urban migration patterns change, many landlords are finding it harder to sell suburban properties. The once desired outlying areas are seeing a decline in demand, forcing landlords to sell these homes quickly. This trend can lead to a unique buying opportunity for those looking for affordable options away from city centers. As we analyze these property types, it's vital to understand the broader economic implications of this sell-off. In the next section, we will explore how these trends are affecting the economy and what they could mean for potential buyers and investors. The widespread sell-off we're witnessing isn't just about real estate. It's a clear indicator of broader economic shifts. Let's break down what this means for our economy and your financial future. First, these mass property listings are creating a ripple effect throughout the housing market. When landlords sell properties at reduced prices, it impacts the overall market valuations in those areas. This doesn't just affect other landlords. It touches everyone who owns property in these neighborhoods. We're seeing average home prices in some areas decline by as much as 15 to 20% from their peak values. But here's what's really interesting. This sell-off is revealing deeper economic trends. The surge in property listings is coinciding with rising inflation rates and shifting employment patterns. Many experts are viewing this as an early warning sign of potential economic challenges ahead. When landlords, who are typically long-term investors, start selling en masse, it often signals a significant market transformation. The rental market is also experiencing substantial changes. As more rental properties convert to owner-occupied homes, we're seeing a decrease in available rental units in some areas. This could lead to higher rental prices for remaining units, creating a complex dynamic where both buying and renting become increasingly challenging for many Americans. Let's talk about the opportunities emerging from this market shakeup. For savvy buyers and investors, this could be the moment you've been waiting for. But remember, timing isn't everything. Strategy is crucial. First, let's address the opportunities. With landlords rushing to sell, we're seeing more negotiating power shift to buyers. Properties that were once overpriced are now being listed at more realistic values, and in some cases, well below market rate. This is particularly true for those multifamily units and commercial properties we discussed earlier. Smart investors are already taking advantage of this situation, especially in areas where property values have historically shown strong resilience. Here are some practical tips for navigating these purchases. Focus on properties in stable neighborhoods with strong rental histories. Look for motivated sellers who are willing to negotiate on price. Consider properties that need minor renovations. They often offer the best value. Be prepared to move quickly when you find a good deal. Have your financing pre-approved to strengthen your negotiating position. But here's the most critical point. Due diligence has never been more important. Before making any purchase, research local market trends thoroughly. Analyze the property's historical performance. Study the neighborhood's economic indicators. Get professional inspections. Review all legal and financial documents carefully. The key is to avoid getting caught up in the rush to buy. Yes, there are great deals out there, but making informed decisions based on solid research will always be more important than making quick ones. As we wrap up our analysis of this unprecedented property sell-off, it's clear that we're witnessing a significant shift in the real estate market. The 8 property types we've discussed today represent more than just listings. They're indicators of changing economic times and emerging opportunities for those who are prepared. Remember that for sale sign we talked about at the beginning? Well, now you understand the complex story behind it. Whether you're a potential buyer, an investor, or simply someone interested in understanding market trends, staying informed about these changes is crucial. Before you go, ask yourself, could these market conditions present the right opportunity for your financial future? The answer might surprise you. If you found this analysis valuable, don't forget to hit that subscribe button and give this video a thumbs up. It really helps support the channel. And speaking of support, check out our recent video, The Little Mermaid, how Disney sanitized a $300 million tragedy, for another fascinating analysis of modern market dynamics. Leave your thoughts in the comments below. I'd love to hear your experiences with the current real estate market in your area.